Good morning, everybody. I hope your weekend went well. It was really, really good here in Wichita. In fact, at least we made it to the mid-60s one day and the mid-50s yesterday. We got a little moisture, not enough to talk about, but all the spring flowers that normally are out around April the 15th are finally starting to emerge from the ground. So spring can't be too far away, or at least that's the hope. No news to drive the trading this week. The market's focus is going to be the direction of the ES. The key for whether this selling continues in the E-mini is selling today. If it doesn't, the correction will probably be limited to about 5 days. But if the selling does continue today, then we can have 12 to 17 days worth of correction. So the direction of the E-mini is going to drive our prices, and it looks like it's going to sell. It's off 7 points from its close. We're at 1850, and if 1850 changes from support to resistance, then I believe our markets can trade higher. There is some resistance in this 24-25 area, then 28 to 30.5, and then basically the buck. So we are at resistance. And just like on Friday, selling failure to take out 24.28 is the short trade. Because of the weakness in the E-mini, I really like the long side better. Usually the day before the short end of the auction is usually finds prices up. And so we'll play for that. I like the buy side better. We're at 24 right now, so we'll make 17 to 21, buy one. And we'll make 13 to 9 for buy two. And my assumption on this 21 trade is that the E-mini is going to continue to sell. So that's what I see for the E-mini. And on Friday, we left wanting to sell failure to take out 24.28. We wanted to buy 13s to 17s, and the low was 20. So the sell may have just developed this morning. Okay, we're working on a YouTube production to get away, to get around these problems that we continue to have with Adobe. There is no way to fix Adobe. The problem we have right now is logistics. So for the AM research, we're investigating a way to put it up raw, but that runs into time constraints on YouTube. It probably won't be purged and cleaned and be in YouTube shape until, maybe after 11 Central, perhaps 11:30. So we got some problems to work out on that, but we are getting there. The PM usually will be up a couple hours after it's up, and we're doing some dry runs on YouTube this week to make sure that we can put it up, but the quality of the recordings is a hell of a lot better. So we got this week to figure out the logistics and make sure that I'm doing everything right. If I don't do it right, it won't get recorded and won't get put out. Okay, we have a high of 6. We have this high over here at 15, so the selling failure to get through 8 to 12 is the trade that I see. Might take 5s to get in, might be a 5 to 9. A lot of it just really depended on which way the E-mini goes. And on the buy side, last rotate down was 27, so we'll make 25, 29, buy one, pretty aggressive. But the 3 The 3-year auction is tomorrow, and that's usually pretty widely supported. Just by virtue of the fact that the short end of the market, 3 years, you don't have a lot of exposure. You can count that. You can mark to market. There's a don't have to mark to market. You can keep them at face. So there's a lot of appeal for banks to buy that paper, and they usually do. Reg, we haven't looked at Cisco's WebEx yet. But we're trying to develop something in the social media, so we probably think that we thought that YouTube might give us a little bit more exposure. That's the logic anyway. Perfect logic, and we might be right too, if you know what I mean. You know, that's our problem with Adobe. We don't exist. We're not big enough to even, and if we're having that problem, everybody else is having it too. So Adobe's customer responses, I would put in negative numbers. So that may change over time too. Okay, here's gold. We've got this 95.97. We left Friday's market on gold wanting to sell 7 to 10. We didn't make it above 5. We were hoping to sell up here. We're at 99 right now. So buy one's going to be 95 to 97, pretty aggressive. But if the stock market continues to sell, we should do okay on this one. You can see we've got some pretty good resistance up here in the 5 to 10 area. So we'll make 3 to 5, sell 1, and then 8 to 10 for sell 2. And if we take out 5, we want to get our setups up there. We don't want to jump out in front of the train, so to speak. These babies can move pretty fast, but there's no news to drive it, so the impetus will be follow-through selling from the stock market. Okay, crude came off. Excuse me, let me do the 6E first. Okay, the euro is finding some buying. The German industrial production was up, was a tenth greater than forecast at 0.4. It was forecast for plus 0.3. That was the only positive news out of Europe. Their stock markets are all off quite a bit, so risk off, buy debt, and that's where we find ourselves. So we've got this area right up here, 35 to 50, and on Friday we wanted to sell 15s to 25s and 40s to 50s, and our buy was down at 65 to 75, and we didn't get close. So we've got 37, 90 for buy 1, and then 75 basically for buy 2. Market looks like it's going to trade higher, so we'll make 30 to 40, sell 1, and then 60 to 75, sell 2. And I think the most important resistance here is at 50. So failure to take out 50 and rejection of 50 to me would be the easiest short to put on because of this. Then above 85, because we've rejected prices above 85. This is rejection. So we're inside those numbers. It's fairly aggressive, but that's what out of the Ukraine about disguised Russian troops masquerading as Russian dissidents protesting against the Ukraine. They seized some government buildings in the Ukraine. The Ukraine's pretty well helpless, and you get these people that are capable of invading your country, then they say our ethnic citizens or our ancestors or relatives that live in your country and are citizens in your country are in trouble. We're going to move in and protect them. And based on sovereign law and history, that's not a very strong argument, but it's used by dictators to great effect as an excuse to go in and steal something from their neighbor. The Ukraine has said that they're not going to honor the change in the gas deal. It's too expensive. You can understand that. And so that continues to play out, but it's on Russia's schedule, and Russia's whatever Russia's goals are, they will accomplish, and there's little the world can do about it. So peace breaks out, market should sell. We got buy one at 100 plus or minus, then 99.50 to 75. We got sell one at 150 to 75, then 101 to 101 and a quarter. And now on to everybody's favorite contract. And I want to add some perspective to this. And we've had a couple of sell-offs, but the ones that have had legs were here, that we can see on the screen, and here. The key is going to be what happens on this second day. If we can get this second day of selling, then we got a chance to go 12 to 17 days for a correction. Now, very few people say that our market doesn't need a correction. So people are expecting something, but you have hedge funds with Apple, Amazon, Netflix, all these really, really popular issues. Those stocks are getting hammered. The tech sector, one person's fund tech sector was off 18%. And you'd like to think that those hedge funds would have moved earlier, but again, it depends on how, their average price, etc. So the key to me is going to be right here. Can we get this second day of selling? Then if we've got a second day of selling, and you can see we got a pretty clean break at 1800. We've got volume down here in this 35 to 38 area. So this is our attractor down here, 38, 39. And then we got a pretty key level here at 1800. Normal corrections in bull markets are 50 to 70 points. If we go into a trading range, you can have 150 to 170 points. And we'll see what that brings. But what I wanted to point out was right here, these two sell-offs and the importance of this second day. If we can get that second day, then we might have a couple of weeks of selling. Always good to maintain perspective. It just, you can't get ahead of yourself. You can't make assumptions that you shouldn't be making. It's like, hot damn, I'm X points up and I'm going to double that today and then tomorrow I'll triple it. You have to pay attention. And a good way not to screw the pooch and to hold in trades is to go buy like 1800 puts or 1825 puts, or if you want to get to that high volume area, 1835 puts, 1840. Then that way you can trade over the top and with futures make your regular income, and then you can have a good shot at making some really big money. Okay, we have a double distribution down, so this started at 58. Got a pretty clean break here at 56. So this 55, 57 area is R1. Very, very aggressive. If we can't get above this level, though, and I think we might, then we got to get short. The desired area to sell it would actually be this 59 to 60. Let them come back up and retest this. But this is 55 to 57 is a market that's going to sell from the get-go. Up here the attractor is 65. Down below the attractor on a 180-day scale is what, 41, 42. So the buy zone that I see is this 41, 42, and I think we'll open it up a little. We may have to bring it in depending on what happens, and then our 35, 37 for buy 2. And then sell zone is 55, and then 59 to 61. And a lot of times there's a pretty nice head fake on the opening where they'll just come up and buy it up and get everybody on the wrong side of the market, take the weak shorts out, and then turn the damn thing on a dime. And that's a very real possibility this morning. Okay, it's going to take me a while to get everything done and around. I'm going to get it done as fast as I can, and I will send out the Camtasia version of this to the gal that takes care of cleaning that up for us. Now she's on West Coast time, so she won't get to it in a hurry. But we're going to try to find a way to get the raw, uncut version up where you guys can see it if you need to, if you missed the early briefing. I'll be back as soon as I can. Good trading in a bit.